Hello everyone, Tara Chisholm here with your market report for the first quarter of 2021. We're going to see how Q1 shaped up and compare it to the first quarter of 2020, right before the COVID shutdown, as well as the first quarter of 2019 for some context. So here we go. So much story being told in this little graph right here. Let's start at the top with units sold. We've seen an increase year over year with a significant change of 71% in units sold 2021 over 2020. And then volume, remember that's the total sales price of these units sold, saw an even more significant change at 115% over last year. Now, this had to do with both increase in values as well as increase in sales at the higher price points. So I know buyers, it feels like home values have gone up 115%. They actually hadn't. Down here at the median price, you'll see that home values have gone up 17%. But before we get there, let's take a look at the median days on market. Now, this high demand, low inventory is causing the days on market to go down. And remember from the last videos, this days on market count includes the time frame from when the property goes under contract to the time when it closes. And that can be anywhere from 4 weeks to 12 weeks, maybe even more in this market. That's much longer than normal years and quite a bit longer than most other markets too. So it's an important thing to take into consideration when looking at this data. Additionally, the low inventory market is creating multiple offer situations and bidding wars. So interestingly enough, properties selling in Q1 of 2021 has sold for an average of 97% of the asking price. I was surprised too. I was expecting this number to be 100% because we're seeing so many full price offers and above asking price offers. However, the market was on such a strong and fast incline with value appreciation last summer and fall. And as we moved into 2021, we've started to see it taper off a little bit. Still staying high, don't get me wrong, but just not inclining at the rate that it was last summer and fall. So some sellers are starting to price as though the values are increasing at the same rate, and buyers are, getting a little bit of negotiation room in some cases. This all falls back to supply and demand, which changes from week to week, from property type to property type, from price range, changes on location. So this can be different based on the home or property that you are dealing with, very different, from Taos to Angel Fire to Red River, all of it. So this is why it's just so important that you have a realtor who is leaning into the data and helping you decipher market values so that you can navigate with confidence. All right, next up is the median price. As you can see here, that has gone up to $340,000. That's a 17% jump this year over last year. And remember, this data includes all residential properties, including homes, townhomes, and condos. But what I want you to see here is the median price and how it correlates to interest rates. So I've done a whole video on interest rates, and if you haven't seen it, please check it out. But the bottom line is, as interest rates go down, prices go up. It's a natural byproduct. So buyers have been seeing this great affordability due to the record low interest rates in spite of the rising values. Now, we did see a bump a few weeks ago in rates, and it's dropped again below 3%, which is wonderful for both buyers and sellers. And we know that they're going to go up. It's just a matter of how much and by when. Most of the data right now and research is saying that they're going to hold for the rest of this year. Of course, we'll be tracking and measuring this, so we can help you see how it is progressing through 2021. All right, next I want to show you median home values in this month-over-month view for the last couple of years. And the story being told in this graph here is that the values increased in 2020. We know that for across the country, and the most significant increases were in the summer and early fall, which is showing up in the fall closings, because remember that 4 to 12 week delay. And they have remained high, but not quite increasing at the same rate that they were here. So as you can see in red, they're climbing, just not at the rapid rate of last year. Next, let's look at the same month-over-month view, but let's look at units sold. So the significant increase of units sold started in July of last year. After things started to open back up, buyers were hungry for homes. So this is where we saw the big jump in 2020. Now, same format, let's move into inventory, listings coming onto the market in the same time frame. You're going to remember that this chart from prior videos, May 2020 is where we saw the new homes coming into the market just did not keep up with 2019. So take a look at this. We lost inventory in May. And then if I go back to this chart, we really started to see a ton of buyer demand starting in July and maintaining through the year. So this is where the market shifted into an extreme seller's market because we lost the inventory first. We didn't have the inventory coming on like prior years, and then we saw buyer demand speed up significantly. Now, as we look at the red here in Q1, we're starting to see that inventory is catching up and surpassing the same months from the prior years. And I do expect April is going to be even greater. And this is okay. This is good. This is to be expected. The market needs some inventory. If the market didn't get some fresh inventory, then the units sold were going to go down because there just wouldn't be anything left. So from the sellers that I'm talking to on a daily basis, the motivations for them putting their homes on the market can pretty much be summed up by two things: values and vaccines. Now, there's plenty of buyers in the market to feed this slight increase of inventory. And just as a reminder, a 6-month supply of inventory is considered a balanced market. Anything higher than 6 months worth of inventory is a buyer's market with downward pressure on prices. And anything lower than 6 months worth of inventory is a seller's market with upward pressure on prices. We are currently sitting with 80 days worth of inventory. So less than 3 months, that firmly plants us in a seller's market. And as long as the interest rates hold, I expect that we're going to stay in a seller's market for the rest of this year. Now, my crystal ball happens to be broken, so we will certainly be tracking and sharing this data as we move through 2021. So please stay tuned. And we have much more detailed data at chisholmgroup.com, including a breakdown by property type as well as by community. As always, call me with any questions, 575-377-2321, and I am happy to help you interpret how the market can best support your personal goals. Have a great day, everyone.